ultimately, when you look at the U.S. consumer, I don't think there's a lot of bad news in the market right now. If we do see some sort of recession in the U.S., that would be a major event. But at the moment, the market is still treating good news as bad news, as a Fed that's going to hike more. So I don't think that's the signal for me. I think this is more a case of we front run the data or front run the news. The news wasn't as good as we expected.
Kriti, nevertheless, good news is bad news. Targeted and forceful monetary policy from China. A few years ago, 10 years ago, that was really, really, really good news. That helped stabilize the entire world. Does anyone think that's going to happen again?
Well, it could happen again, and I think almost that precedent that you just mentioned is why perhaps the market is getting it wrong. Look, this is the one thing that the Federal Reserve hasn't actively addressed. They haven't talked about the China of it all. They've kind of talked about it tangentially in terms of, say, supply chain disruptions. They've talked about higher pricing, but they haven't necessarily said, look, we have to be even more hawkish because China's COVID-0 policy is fueling global inflation. That's a comment that the Federal Reserve hasn't made yet, and for that reason, I think it's creating a blind spot, not just in the commodity market, but in the bond market as well, because take a look at what's moving off of these China reopening headlines. It's not the bond market. It's not the 10-year yield. That's still anchored to the Fed. And I think that creates almost some mispricing when it comes to China that you're really only seeing taken into account in the equity market.
Eddie, do you think anybody's really got a handle on how the China reopening is really going to work? I find myself really struggling with this one. I don't know. I don't know whether cases are going to explode and we're going to see a problem. I don't know whether this is going to be a smooth reopening. I don't know whether the housing problem is going to become a bigger issue once people get out of COVID-0 and start refocusing back on what is happening there. There just seems to be a whole range of imponderables that we don't know the answer to yet. So calling the impact that China's going to have strikes me as being really difficult.
So I do think you're right. I think this time we have a precedent, right? We've had other economies coming out of lockdown. Last time when Europe and the US came out of lockdown, we'd never seen anything like it before. So we didn't know what to expect. I think we do know we're going to get a spike in cases. The wild card here is we don't know how the authorities are going to react. We don't know how the people on the streets are going to react, because I think we are going to see those rising cases. We are going to see an uptick in hospitalizations and so on. And I think that is the wild card. How the authorities then react. Do they send people back into severe lockdowns? Do people start calling on the streets for further lockdowns?
I do have to wonder, though, Kriti, is if any sort of targeted measures, even if we wind up having to go to some form of lockdown again or restrictions, if there are targeted measures from the fiscal and monetary authorities, if that's going to be enough to help offset this massive withdrawal of liquidity that we're seeing with Western central banks, like, does this help support the global economy in some capacity as central banks are kind of moving the scales to the other side?
It almost has a lagging effect, because think about the other major economy that took a while to actually reopen. That, of course, is the United States. Remember, when you had, I think this was May 2020, the very first reopenings happening in, say, New York City, for example, one of the big issues for the Federal Reserve was we need to stay kind of easing because we don't actually know when we're going to go back into lockdown. The emergence of the Delta variant, the Omicron variant, almost contributed to that lag. So I almost wonder if that's contributing to a lag for the PBOC and arguably other central banks as well. It's something you can't predict, once again, because of these false starts that you're seeing in China.
Guys, really fun convo. Good to see you both, Kriti Gupta and Eddie Vandervelde of Bloomberg. Thank you both very much. Well, coming up, we're going to continue the conversation. If China's economy is this weak, what does that wind up meaning for European growth? Germany is heavily dependent on its exports to China. We're going to talk more about that with UBS pan-European economist Anna Petrieva. This is Bloomberg.
So Europe has a number of Achilles heels. I'm not sure you can actually talk about having multiple. Maybe you can have two, but that's probably maybe the limit. One of which, in particular for Germany, but for some other economies as well, has been obviously the exposure to Russian gas. The second one, obviously, is the exposure to the Chinese economy. We are now seeing very poor trade data coming out of China. We referenced it in the last block. It's both import and export data. So what does this mean? What does this signal? What does this tell us about where the European economy in particular is going and how the ECB should be thinking about policy going forward? And it is Yareva, pan-European economist at UBS Investment Bank, joining us now to discuss. What is the read across? Good afternoon, by the way.
Good afternoon.
What is the read across from the Chinese trade data into European data?
Well, in general, the whole sort of concept of China reopening is sort of a mixed blessing for Europe this time around. In normal times, we do want strong Chinese growth. We generally work with sensitivity that every 1 percentage point stronger growth in China adds about 10 to 15 basis points to Eurozone growth. So that's something that we want. On the other hand, part of the reason why we managed to build up very healthy levels of gas in the European storages was the fact that China was in lockdowns. So this time round, and the fact that we're going into winter heating season, China reopening is sort of a mixed blessing for us.
If China is not importing as much and exporting as much, how does that affect Europe? If I look at the export data, does that tell me that the European economy is slowing down? It's not consuming as much. If China is not importing as much, does that tell me that we should be worrying about European export numbers, particularly Germany, Sweden, etc.?
Well, what we see already in sort of very timely surveys is that, yes, in fact, new orders are coming down, also including new export orders. But also, if we look at German order books, they're still full. So whilst we are seeing decline in new orders, companies are still working through existing orders, which should keep production levels relatively healthy for the next few months.
And at the same time, it feels like there is the threat of some kind of trade issue with Europe when it comes to either the U.S. or China. If we stay with China for a moment, there's a WTO case over Lithuania from Europe to China. There's also potential for the EU and U.S. to get together and tax aluminum, for example, with main polluters, which would include China. Can European growth handle that right now?
Well, there are a number of headwinds for European growth, and of course trade issues is one of them. We've already seen a number of comments coming from Europe regarding policy towards China, but there is very cautious stance given how integrated supply chains and how exposed European economy is to China. So I think over the next few months we're going to see more of the same sort of very cautious comments, but not very strong action.
Do you think that the U.S. and the EU can avoid trade friction?
Well, what we've seen over the last few weeks is that, first of all, France and Germany individually made some comments. Now we're also seeing some comments from European Commission President at the broader EU level that, when it comes to digitalization, competitiveness of European companies. So there seems like some action from Europe is coming.
Anna, how does the ECB think about all of this next week?
When it comes to our baseline, we think that ECB will continue with hikes, but crucially we think they will slow down the pace, so we expect them to hike by 50 basis points, but we do acknowledge that both 50 and 75 basis point hike will be on the table. At the moment, ECB is very focused on inflation outlook, and even though we've seen some easing in headline inflation, we saw a decline from 10.6 to 10% in November, ECB is still concerned that it still might not be the peak yet.
50 plus QT, does that equal 75? Is 50 plus QT a definitive date on when we're going to start QT likely this time round, do you think?
We don't actually think we're going to get any sort of definitive announcements regarding QT. We think it's going to be more outlining the key principles, so just saying that QT has to be predictable, non-disruptive, gradual, etc. When it comes to specific timeline and potentially size, we expect a more solid announcement to come only early in February, with QT itself starting in April.
All right, Anna, thank you so much. We really appreciate it. Wonderful analysis. Anna Tudreva, a European economist over at UBS Investment Bank. Thanks very much. Well, coming up, the skies may be brightening for airlines as the industry emerges from the pandemic. We're going to sit down with the CEO of Latin America's biggest low-cost carrier, Volaris. And as we head to break, here is what IATA Director General Willie Walsh told us yesterday about the recovery in the aviation industry.
We're still forecasting global GDP in positive territory. Now, it's clearly a significant slowdown from where we were, but our latest forecast has GDP at 1.3%. Regionally, though, it clearly will make a big difference. The North American carriers have benefited from a very strong performance in their domestic markets, which have largely been unaffected by the COVID travel restrictions that we've seen in other parts of the world.
Latin America's largest ultra-low-cost carrier, Volaris, rang the opening bell earlier today at the NYSE. The airliner held its investor day after reporting a 19% increase in demand growth. Well, joining us now is the CEO, Enrique Beltranena. Volaris CEO joins me now in studio. Congrats on ringing the opening bell. That's always a fun day. What is your growth pitch to investors for next year? And how does a potential global recession affect it?
So we basically have put a path of 4 pillars. The first one is low-cost leadership. The second one is market profitability leader. The second one, the high growth opportunity and the financial strength. It basically depends from being the lowest cost operator, generating the highest growth that we can generate with a profitability profile which is very high, and then a very strong financial profile.
If there is a global recession, though, does that change your profile?
Well, it might change it a little bit, okay, but I think the macroeconomic numbers from Mexico are holding on really well. Demand is holding on really well, but we are the lowest cost operator versus probably airlines like Ryanair or Wizz in Europe. So being the lowest cost operator, we can adjust our structure in a very, very efficient way.
Do people trade, Enrique, good morning, it's Guy. Do people trade down to you if we do see an economic downturn? Do you benefit as they move away from higher cost carriers?
Definitely. I mean, what we have seen and the experience is typically the people that are flying the legacy carriers, and in the downturn, they start flying the ultra-low-cost carriers, especially Volaris, because we are the lowest price operator in the market.
We were talking about China just a moment ago, and what we're seeing is that a lot of companies are reshoring production back to North America. Now, they're struggling with labor in America, and as a result of which Mexico has the potential to pick up quite a lot of that reshoring activity. How do you see this playing into your business model?
Well, we're very certain of the impact of that. I mean, the estimated numbers is that, for example, exports could go up about 10% for next year with the nearshoring. In our case, that translates itself in more flows between the two countries, in more flows between the visiting friends and relatives, and obviously remittances, which are very important for a segment of low pricing like ours.
So that's sort of the headwinds that we've been talking about. One of the tailwinds, though, could potentially come next year, and an upgrade of your safety rating from the FAA. If that happens, how many more destinations and what upside could we see?
So what we could see is a growth of our capacity between 7 and 8% of where we are today, which is a really important move. And I think that might happen. We're very certain that that probably is going to happen at the end of beginning of spring. And we need 3-4 months to prepare ourselves to launch the capacity into the market. So it might happen during the fourth quarter of next year and into the following year.
Do you have that capacity, or are you going to need more 320s?
Well, we obviously could need more capacity if it really booms, but at the beginning we are certain that we can reshuffle capacity within our own network and start preparing ourselves to do that growth.
Could you also look at expanding, say, in Central and South America through acquisitions too, if you need to beef up?
I'm open to it, but it's not happening yet, so I rather don't speculate on it.
Enrique, what are you seeing in terms of the availability of staff? How are airports operating that you operate with? Are there going to be any kind of issues, bottlenecks that you're going to face in 2023 as you look potentially to ramp up, particularly capacity into the United States?
Look, so far we have been growing in a very fast path. I mean, last year we grew up about 29% of our capacity. This year we're growing 25% of the capacity, and we haven't seen a problem with the airports we are operating in. I think the most critical ones are Chicago, O'Hare, and LAX. And in both airports, we did receive the right services and we did have the right infrastructure and support that we needed. The rest of the airports in the U.S., we are operating from tiny airports which have enough capacity to serve us.
Quickly, jet fuel prices next year, up or down?
I think it's probably going to stay more or less where we are, okay? And probably we'll have a reduction by the end of the year. But I am not an economist, so I should not be taking as a good source for it.
Enrique, we're going to leave it there. Thank you very much indeed. Enrique Beltranena, Volaris CEO, thank you very much indeed. Okay, let's take a quick look at European markets as we head into the close. You are certainly seeing healthcare stocks giving us a decent lift here, but elsewhere you're seeing some weakness. Airbus, interestingly enough, under a little bit of pressure. Some of the fertilizer stocks down as well. We'll give you the details in just a moment. We're softening into the close. This is Bloomberg. So we're wrapping up the day here in Europe. European trading coming to a close. To be honest, one sector, the healthcare stocks, I kind of went a little early there on that one, doing all the heavy lifting today. European stocks are broadly lower, but it could be worse if the healthcare sector wasn't doing what it's doing today. In fact, if we didn't see GSK and Sanofi and a couple of other stocks doing as well as they are today. But we are down. We're down by, on average, I would say 2, 3, 4/10%. The stock 600 now trading 436. We're down by around 0.5%. We've been lower on the day. We're just rolling over into the close here a little bit. Some softness coming through. Doesn't seem to be a convincing narrative once again, though, in terms of the story that we're watching here. I mentioned healthcare, so let's just kind of talk a little bit about that. We'll talk in a moment about GSK, Sanofi. Sam Fazeli is going to be joining us to walk us through what is happening here. This all relates to the Zantac case being thrown out. We're not done with this yet, but this is a big win for these healthcare companies, and they're heavyweight companies, and they're giving the market therefore a little bit of upside momentum. But on the downside, you've got energy down today. You've got Brent sub 80. You've got basic resources coming off. I think this is all China related. Telecoms are down. Food and beverages down. Real estate's also under pressure. Keep an eye on what's happening in real estate. The outflows in some, particularly commercial property funds, really quite aggressive at the moment. Let's talk about single stocks, just show you what's going on here. This is a company we don't talk about very often, and it made my US colleagues chuckle. Moonpig is a company here in the UK. I think it's actually based in Guernsey. It delivers gifts, it delivers cards, it delivers fizzy bottles of Prosecco and champagne to people so that they can enjoy special days. But apparently people are trading down, Alex. I'm sure you're going to have something to say about this in just a moment. They're going from champagne to Prosecco, which is apparently causing something of a downdraft in Moonpig's world. That's a big deal, isn't it?
I do have thoughts about this. One might argue that Prosecco is a bit better than champagne. I might be one of those people. You can also do it with mixers. You're not going to do mixers with champagne. That's just silly and a waste of your champagne. I might be more apt to agree with this Prosecco trend.
Can I just say that Sam Fazeli, who's about to talk to us about GSK and Zantac, is something of a wine aficionado. He's standing just offset. I can see him just in my eye. He is shaking his head.
I should point out, I don't even really drink anymore. But this was like pre-COVID, okay. Alex. I'm just pointing that out.
Okay, we're going to move away from the fears. We'll talk a little bit about what's happening with Airbus. We've got the news kind of this time yesterday that it's not going to make its 700 delivery target for the year. We saw the instant reaction in the ADRs. Today we're getting it in the French stock down by 2.5%. And then we come to the event that we need to be talking about next. So a US judge throwing out the science surrounding the cases concerning Zantac and the fact that it was potentially causing cancer. That's good news for Glaxo. That's good news for Sanofi and a whole range of other stocks. Glaxo was up more than this a little bit earlier on, but this is a heavyweight stock in the FTSE 100, Alex, and it's up by 8.2% today.
Yeah, and many analysts are obviously pretty positive on this. You have Barclays, for example, saying that Haleon is investable again and that it's substantially de-risked. That was a company that was also brought into the Zantac situation. Citi said it was the best case scenario for Glaxo and the co-defendants, and it'll probably influence those state-based legislation issues next year as well. So it's not like 100% out of the woods, but it's pretty de-risked. Let's get a closer impact now on it with Sam Fazeli of Bloomberg Intelligence. We will get to wine and Prosecco conversation in a moment. Is this scenario completely de-risked for Glaxo and Sanofi or no?
Well, Alex, I would say that it definitely reduces the risk. But if you look at what my colleague Holly Froome, who is Bloomberg Intelligence's litigation expert, has been saying, is that it reduces exactly that. It reduces the risk as opposed to completely get rid of it. But in her assessment, she has downgraded the potential penalties that they could face to $2.5 to $3.75 billion. And that, of course, is now, we have 35,000 to 50,000 still state cases that have still come to the fore, and we'll have to wait for that, potentially the first quarter, the first one being in California.
How clear was the science? The judge talked about, in this particular case, the judge talked about the fact that the plaintiff's scientific experts used unreliable methodologies So was this always going to be a marginal case, or was the science kind of clear one way or the other?
I think in these cases it's always very difficult to draw a direct parallel between treatment that somebody's been taking for 10 years, 15 years, however length of time, and an eventual cancer. A lot of people get cancer. The problem, Guy, is that if you have a condition that requires you to take an antacid, it says a little bit about your perhaps genetics, your lifestyle, your other aspects of your behavior, acid level in your stomach. So there is something that's different about you. How can you prove that that's not part of it? If you needed Zantac, maybe. So that's the problem. That's where the science gets very difficult. And I can see that this would be a very complex, 300-page judge's report by the sound of it.
I have to say, I used Zantac for a while because I had an ulcer. I wonder where I would get an ulcer from, being in a very high-stress job. Sam, what should this be worth to the stock? Like, if it's not 100% de-risked, how do you model it?
Yeah, well, so the way that Holly has been looking at it is that she thinks that who is our litigation analyst, about 30% of that $2.5 to $3.75 or so billion risk is attributable to Glaxo. But obviously these are court cases which are very difficult to read. So maybe about $1 billion, $1.5 billion still at risk. But all of this can change again if the same thing happens at a state level, and that's exactly what the federal case that's been thrown out potentially suggests. Therefore, you should be less worried about it. Remember, Glaxo was trading at 17, 18 pounds a share, so it hasn't recouped all of that. And there's other things that are going on with Glaxo that are not just related to its litigation, that are potential issues when you think about it as an investment case.
Before we get to Alex's unorthodox approach to Prosecco, let's talk a little bit about what's happening in China. Your take, the reopening, what are you anticipating? They're easing up on rules. They're not completely easing up. What is your take on what happens next?
Yeah, so I think we're just going to continue to see these cases go up. There is I said to somebody the other day, you go and stand in the middle of a motorway, it's likely to get hit by a car. These are not negotiable situations. The virus is not going to not find everybody who's infectable. So in cases will go up. The question is, how bad will they be hit by hospitalizations and deaths? You've seen some numbers. We published some numbers a few weeks ago saying if it was the same as what happened in terms of the number of cases for the Omicron waves that we had in the first 6 months, we could be dealing with something like 600,000 deaths. I think Financial Times has talked about, somebody wrote a model saying 1 million deaths. The numbers will be high. It all depends how good their vaccines have been.
Yeah, Airfinity was also talking about a big range of 1 to 3 or 2 million, I think 1 to 2 million. Okay, so you're the wine person. Am I totally off my mark here? It's just that champagne is a little bit too dry. I need like a touch of sweet.
Alex, the only thing I'm going to have to tell you is that next time I'm there, you're going to come out, break that vow not to be drinking, then I can show you some champagne that will not be like what you're talking about.
I'm so there.
Are you saying that she's not drinking proper good champagne?
No. There's just so many different versions and types, etc. I don't like sweet champagne, so.
Okay.
I don't like
champagne
sweet
generally.
Champagne. It's just a.
Oh, you do?
I do. Okay. I do. Maybe I do. All right. They're telling us to go. Bye-bye. Guy.
Sam, I think she's telling you to go.
Okay.
That does sound suspiciously like it, doesn't it? I'm very happy for Sam to still be here, but we're going to let him go. Sam Fazeli of Bloomberg Intelligence, always appreciate it. Thank you very much indeed. Not only a pharmaceutical expert, but also a champagne expert as well. If you're going to be an expert in anything, champagne is the thing to be an expert in.
Sure.
Anyway, European stocks have closed for the day. These are the final numbers. These are the scores on the doors. This is how we're wrapping things up. As you can see, a negative session. They got a little bit more negative as we came through the close, Alex. You and I are going to be talking about this on the cable. We've got plenty to talk about when it comes to that China story and the impact it's going to have on the European economy as well.
All right, well, coming up, this teases for you, Guy. We turn to the FX market to see if the buck will stop. Esther Reichelt, FX strategist over at Commerce Bank, will be joining us. This is Bloomberg.
Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. A warning today from Vladimir Putin. He stopped short of pledging not to use nuclear weapons first in a war, saying that Russia's arsenal is a deterrent factor. Putin reiterated that Russia will defend itself and its allies with all means necessary. He was speaking to the Kremlin's Human Rights Council. In Germany today, more than 3,000 law enforcement officials conducted raids aimed at breaking up what authorities called a coup attempt. According to prosecutors, they detained 25 people linked to a far-right terrorist group that wants to overthrow the government. It's called the biggest ever raid targeting right-wing extremists in Germany. And US lawmakers are set to remove barriers to the sale of F-16 fighter jets to Turkey. It's a move that may repair damaged ties between the two allies. The defense spending bill dropped a provision that would have blocked the sale unless President Biden certified it was in the national interest and that Turkey wouldn't use the jets to fly over Greece. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thanks so much, Ritika. So let's take a quick look at the markets. The dollar's trading heavy. Equity is now rolling over. S&P off by about 0.2%. But one thing that's a head scratcher, it's what's happened to the euro in the past few weeks. I mean, it wasn't that long ago that we were near spot 95 for euro dollar. And that leads us to our broader question of the day, which is, can you explain this price action to me and Guy? So joining us now is Commerce Bank FX strategist Esther Reichelt. Esther, we don't understand what's happening in the currency market over the last few weeks. How do you explain the move in euro dollar?
Yeah, as you said, it's largely a U.S. dollar story because we had a shift in sentiment. You know, like before autumn, during the whole summer, it was all about the Fed tightening, and now the market focus is actually already on the end of the tightening cycle, and this has sped up when Powell announced last week that indeed the Fed is considering reducing the speed of its Fed rate hiking cycle. Now the market is focusing on, you know, like they will not continue to hike forever, and we need to see the FX market adjusting to this new world.
Esther, how big a factor has China played in all of this as well? We see much more positive news coming from China over the last 2 or 3 weeks, and it seems to have again coincided with this move higher for euro dollar.
Yeah, indeed. I think it had an important impact on overall FX market sentiment. However, it does not really induce a new fundamental story, largely also because China will most likely focus more on the internal demand side. And so in the end, I think global fundamental drivers like the recession risk in Europe and the US will be the more important impact on the FX market.
So here's a question that we're all going to love. Where does the buck stop? Where is going to have we oversold at this point?
Well, actually, I think the correction we have seen in euro dollar so far has already gone quite far because the Fed keeps, you know, like stressing that they will need to tighten further and that they will remain a tight monetary policy, and the market just does not really believe that and doesn't play this. So if the Fed succeeds in convincing the market about this, we might actually need to see somewhat stronger US dollar. In the end, we also believe that there is a chance of Fed rate cuts as early as next year, so that overall higher euro dollar levels are justified.
Can I just talk to you about the relative trade, though? What we've seen today from the Bank of Canada is a signal maybe that it's nearing the end. Yes, it's hiked by 50, but it sounds cautious going forward from here. The ECB is tightening into a potentially very severe recession in Europe. How far is it going to be able to really go? Same for the Bank of England as well. Isn't there a greater potential that the Fed is going to have to go further than all of these other central banks? And why shouldn't that be positive for the dollar?
That's exactly, you know, like the big question. All the central banks are stressing that they are basically most likely have to ignore the recessions. The marketplace that they will adjust the monetary policy to take the recession into the consideration. And history shows us that the Fed tends to over-tighten, and then they actually also cut interest rates much more than they initially indicate. And that's exactly what the market is playing. So that the Fed will indeed, because they have hiked more than other central banks, now they also have the potential to cut more than and other central banks, and that's what's weighing on the dollar.
Esther, did you think that the Bank of Canada move today was dovish or hawkish?
Well, it does seem dovish. On the other hand, the U.S. dollar interest exchange rate is indeed is exactly showing a big overall story. The U.S. dollar has rallied also against the loonie. So despite the Bank of Canada tightening quite much, this has not been reflected to that extent in the exchange rate. So despite the BOC now sounding a little bit more dovish, I actually think there is some potential for the loonie to appreciate against the US dollar as we see this US dollar Fed correction.
Okay, but the Bank of Canada was a little dovish today. Maybe that's the big takeaway here. Esther, in terms of the surprises for next year, what are you looking for here? Are we going to go back to a more normal world, or do you think we're going to continue to see quite big moves? The move in euro dollar from the kind of mid-90s to 105 has been really quick. Are we going to see more of these moves as the market kind of tries to figure out exactly where all the different central banks and all the different economies are going to settle?
Yeah, that's exactly what I'm expecting. I'm expecting quite a high volatility, although the overall levels might actually not change that much. But, there is this enormous uncertainty about whether inflation will indeed go back to normal levels. And we believe that there is a strong chance that inflation might actually be higher elevated. And the market playing how the central banks are going to react to that will induce enormous volatility into the FX market, in my opinion.
Esther, when and if would the dollar become a safe haven again? And if not, what's the next best as we enter a really volatile, as you're pointing out, tumultuous year?
Well, the safe haven discussion is always quite difficult. In the end, we believe that behind this is a carry trade story, and right now, the US dollar is not the perfect funding currency, so that, a higher risk will lead to a rewind of these trades. Still, what we are seeing is if uncertainty goes up, everybody, simply prefers the liquidity of the US dollar, and I think this will remain the case for years to come.
Esther, great to catch up. Thank you very much indeed. Esther Reichelt of Commerzbank. Great stuff. This is Bloomberg.
Stay like Bloomberg.
Stocks really struggling for direction here. Help me find a narrative on this one. S&P is now down by 0.2%. Abigail Doolittle tracking those moves. Abby?
Yeah, it is tough. Here's the roller coaster that we're looking at on the day. And earlier overnight, we did have stocks slightly higher, then on the open down, and now kind of zigzagging. Earlier, they had been higher when we were looking at the same exact chart. So it's going to be interesting to see whether or not stocks stay down for 5 days, which would be the longest losing streak since the beginning of October, or if that streak snaps. Now, technically, there's still an intraday reason to think that that might snap. Another reason to think that stocks may move out of the recent ditch is the Fed funds terminal rate. If we take a look at this chart, we can see that it is, yes, very high, the highest it's been in quite some time, above 5%, but it's starting to come down. That said, there's an interesting range developing here. What's more interesting about this chart is which way this range breaks. We're either going to see this terminal rate go quickly down toward 4%, or we're going to see it quickly go up toward 6 or 7%. The direction will probably see stocks and risk assets go in the inverse direction. We don't know, obviously, yet. As for what's dragging on markets today, it's all about big tech. We have Apple trading lower by 1.3%. NVIDIA coming off of its lows down just 3%, or 1/3%, excuse me. And then China Tech taking a bit of a breather in its 75% 1 or 2 month rally here on the reopening hopes and what that could mean for their economy and, quite frankly, the global economy. So some of those individual movers lower. Finally, if we round it out, it's been, I believe, a $1.3 trillion, $1.2 trillion sell-off into today as of 11 a.m. These are the market cap losses, and it's pretty widely dispersed, guy. Take a look at this. JP Morgan losing 17 billion. Chevron, the energy company, losing 19 billion. But of course, it's all about Tesla, Apple, Amazon, these big tech movers trading super sensitive as rates have until today, and I believe yesterday also, had gone a little bit higher. So just the volatility, the uncertainty, it continues.
Absolutely. Christmas is coming. I think that probably is a major factor as well, though Cameron Cries on the Market Live blog questioning whether Santa Claus has got lost. Abigail, thank you very much indeed. Bloomberg's Abigail Doolittle on what's happening with the markets. We get GameStop earnings later. That's coming after the bell. Do we care anymore? I'm not sure. Maybe that ship has sailed. Alex, we've also got, this is something I think we could maybe keep an eye on. Xi Jinping is in Saudi Arabia, and I think this is a really interesting relationship, and it's going to be interesting to see how it develops from here. The US is still a major provider of security for Saudi. How does this relationship with China develop? Does it interfere with the security relationship?
Well, also, I wonder how their energy commodity relationship continues. And also, it's sort of the closer that they get, it sort of shines a spotlight on the divergence of the West and the Saudis, the U.S. and the Saudis, or the U.S. and China. It feels like from a Western perspective, a tighter Saudi-China, it feels very difficult to wrap your mind around. It doesn't feel necessarily a huge positive.
No. And it raises interesting questions about Iran as well. We've also got the Polish Central Bank leaving its main interest rate unchanged, 6.75%. The estimate 6.75%, so no surprise there. What else we got coming up?
You are scraping, if you're breaking Polish Central Bank heads, we are scraping of the barrel of December. That's literally all I'm saying. I'm actually looking forward to Costco coming out tomorrow after the bell. Remember, they pre-reported their sales numbers, and it wasn't great. And that really hit the stock in a big way. That's a good pandemic recession indicator. So I'm watching that for tomorrow as well. Guy and I are going to take this scintillating conversation to radio, so check us out there. Meanwhile, coming up on Bloomberg Television, Leon Panetta, former U.S. Secretary of Defense, will be joining Balance of Power with David Weston on television and radio. We made it through Wednesday. This is Bloomberg.
from the world of politics.
It is my honor to utter the four most powerful words ever spoken in a democracy. The people have spoken.
To the world of business.
I do expect we'll see recessionary pressures in 2023. I strongly suspect the Fed feels that way too. It's possible to have a soft landing without a recession, but not really and get to 2% quickly.
This is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. Well, Georgia held its runoff election. You heard there from the once and future senator from Georgia. He is Reverend Raphael Warnock. And now we're going to go to our Washington correspondent, Joe Matthews, on the scene down in Atlanta. He's also the host of Sound On weekdays on Bloomberg Radio. So, Joe, in the end, it didn't take us that long to find out what the answer was.
Yeah, that's right, David. A decisive victory for Senator Raphael Warnock, and to think we actually got results the day of the election. Pretty remarkable. You heard his reaction there at the victory rally last evening. We thought today we would come down to the source, to where it all began for Senator Raphael Warnock. Behind me, you see the iconic, the historic Ebenezer Baptist Church, where Warnock has been pastor since 2005, and of course, following in the footsteps of Dr. Martin Luther King Jr., whose house is just a couple of blocks up the street, that national park that includes his birthplace. Now, this is where the ground game began. This is where Warnock honed his skills as a communicator, and it was a ground game enhanced by Stacey Abrams. A big part of this story, while she lost her run for governor here, her apparatus was very present yesterday in re-electing this Democrat, though there have been a lot of questions about the way this runoff took place and whether it should have taken place to begin with, David, remembering that this runoff election here in Georgia, this style of voting, was implemented in the 1960s by segregationists who self-admittedly were trying to stifle the black vote, or as they called it then, block voting. I talked about that with the Secretary of State from Georgia, Brad Raffensperger, and asked him whether it was time for a new system.
People really want to figure out what is the best solution. Do we keep it as it is, or do we need to look at instant runoff? Do we need to look at this 45 minimum? But there'll be lots of other different options I'm sure will be talked about. And that's why it goes through the committee process, and I'll be in the House and the Senate doing that hard work in that 40-day session of figuring out how do we further improve. But at the end of the day, we want everyone to know that your vote counts. It's going to be safe, it's going to be secure, it's going to be accurate.
Those remarks made exclusively to Bloomberg News, and we're going to be chasing down this story over the course of the months ahead to see if the General Assembly does want to tackle this. In the meantime, and separately, Raffensperger was asked about the way the election was conducted here in terms of early voting and the count. He was very confident when I spoke with him, David, remembering that Donald Trump had accused him of fraud and a lot more back in the 2020 election. He says this was the most secure election Georgia ever held. David?
Yeah, and thank goodness we're not hearing much about stealing an election. Thank you so much, Joe, for all your coverage down there. You can catch Joe Matthew at 5 p.m. Eastern Time on Sound on Bloomberg Radio today. And now we're going to somebody who really has had experience with midterm elections from the inside. He's Leon Panetta, chairman of the Panetta Institute for Public Policy. Mr. Panetta has, of course, served as Secretary of Defense, Director of the CIA, and under President Clinton was Chief of Staff. So thank you very, very much, Mr. Secretary, for being here. As I say, you were Chief of Staff during a midterm under President Clinton. Give a little advice, if you would, to the Biden administration. How do they set up the second 2 years of their first term?
Well, there's no question it's a challenge when you have a divided government and a divided Congress now. But it's also an opportunity. I think Bill Clinton understood that although he had lost both the House and the Senate, that he was going to make an effort to ultimately work with the Congress. And as a result of that, he was able to work on a bipartisan basis to get some things done. I think the Biden administration has to have the same focus, that that you've got a very narrow margin in both the House and the Senate. It is an opportunity to try to work on legislation where you can get agreement from both parties. It means you're going to have to focus on what unites both parties rather than what divides both parties. And if he does that, and if he stays in close touch with the leadership, as he's used to doing as a former member of the Senate, I think he's got a good feel for how you can work with people to try to see if you can get some things done. So I think there's an opportunity here. I hope he takes advantage of it, and I hope the leadership of both parties take advantage of it as well.
It sounds like some very good advice from somebody who knows it. Let's turn now, if we could, to some geopolitics, and particularly Ukraine. We heard from President Putin of Russia earlier today talking about the threat of nuclear war going up. He was saying we're using our nuclear weapons as a deterrent to prevent conflicts from expanding beyond where they are. Everybody thought he was talking about Ukraine, and I understand allies are getting sort of nervous about Ukraine with some of those drone strikes about Russian military targets inside of Russia. Are we pushing it too far?
Well, you know, we've entered kind of a very brutal and dangerous chapter in this war. The reality is that, you know, that Putin is losing in the Ukraine, but he's a cornered bully, and he's going to strike out in terror, and he has, trying to conduct these missile attacks against infrastructure, against power in the Ukraine. And Ukraine, obviously, to its credit, has made clear that they're going to strike back. They're not just going to allow them to, without any kind of price to be paid, continue to send these missiles into the Ukraine. That creates a dangerous situation in which there's obviously a danger of escalation. Putin, however, I think has used this nuclear card an awful lot during these last few months of the war. And what he found out from President Xi of China is a warning not to do that. And I think in the end, I'm not sure that's a threat that's going to actually be implemented by Putin.
That said, Mr. Secretary, if you were Secretary of Defense once again, or Director of CIA, but Secretary of Defense, would you be advising right now that the United States put whatever pressure it can on Ukraine not to have drone strikes inside of Russian territory? Because that's the critical distinction. There have been, I think, 3 military bases hit now inside of Russia.
You know, I think the important thing is to continue to provide Ukraine with the arms and weapons they need in order to defend themselves. You know, if you're going to avoid hitting Russians where it hurts in their own bases where they're sending these bombers that deploy these missiles, what's going to happen is you're going to have to develop a very strong air defense system for Ukraine. And I think that should be the focus. Can we develop virtually a comprehensive system of air defense for Ukraine where they can strike down most, if not all, of the missiles that are fired at them? I think that ought to be the principal focus.